Okay, so the last like miscellaneous topics in the chapter, internal controls. Again, we talked about this in chapter 7. But payroll is also a very sensitive area of fraud and potential mistakes. So there's a bunch of stuff. Again, when you're thinking about internal controls, it's good to kind of think like a scammer, because then you, as a business owner, can protect yourself. Okay, so there are a bunch of common scams or whatever mistakes that can happen with payroll. Uh, buddy punching. So this is like when someone clocks in for you and you're not there. So the employer ends up paying you for hours that you actually didn't work. Okay, so this is like, what are some like modern ways that employers now protect against this? Exactly, exactly. So biometrics, right? You have to physically be at some machine to clock in, right? So that's an internal control. The business had to spend money to get that special kind of clocking in machine. If they could trust the employees, you could just do it on a piece of paper, but employees be scamming. A business has to invest in internal controls, and one way is um, biometric kind of timekeeping. Padding timesheets. So you just add extra time to a timesheet. Okay. So, one way, again, a business will do this is biometrics, or they'll, there has to be some, video cameras. There's a lot of things that an employer can do based on what their business is, and what the potential areas that an employee could do this. But this is a common one. Commission and bonus schemes. Okay, so if a worker is paid by a percentage of sales, they can do various things to pad their sales numbers. There's certain businesses where this is a much bigger issue. Ghost employees. So this is one where someone in the accounting department can be scheming. Okay, so you can create a fake employee, or like list your buddy that doesn't actually work there, use their social security number, add them to the payroll system, and they're going to get paid, right? The common one that has been in the news a lot is like your business or your non, this is happening a lot in nonprofits, where the nonprofit pays the business of their spouse or someone else, like some amount, for not really doing much, if anything. So just paying fake work, because what is an NGO? How do they get paid? It's based on their expenses. Okay, so oftentimes they will pad their expenses with payments to related parties, and increase their funding ask, because they have this larger budget. Pay rate alteration. Okay, so again, this is if you have access to the accounting system or the HR system, you can just change yourself from a $25 an hour to a $55 an hour worker. These two are limited to people that have access to the accounting system. Okay, you need to be able to manipulate how the calculation is done to pull these off. And then expense reimbursement fraud. Okay, this is a common one too, where an employee will spend a bunch of stuff on their personal um, their personal needs, and then expense the company. And we saw that with the Jacksonville Jaguars guy, right? Who was buying country club membership and gambling and all that kind of stuff. I have a friend who works at a company, not to be named, but they're running a scam. Not a scam. I mean, it's tax avoidance. Okay, that's mutually beneficial to the company and to the employee. What the employee will do is basically go to Costco or whatever, use the company card to expense their own personal items. And this is in lieu of a bonus being paid. Now, why is this a win-win? Number one, the business can expense all those items in its own taxes to reduce its taxable income. Secondly, the employee benefits because they're getting the value of that bonus, but they're not paying any payroll tax, and they're not paying any income tax on it. Okay. And my friend who is like stepped in as kind of the accountant, he's like, I'm not going to sign off on this. And he's like, if you're going to do this, I don't want to know about it, you know? But it is illegal. This is highly illegal. It's tax fraud. Okay. So, and the owners of the company are cool with it because they're just like, they feel like the risk of getting caught is low, um, which is probably true, but it's still tax fraud. So it's not just the employee necessarily scamming the company. It could be a mutually beneficial thing because the in this case the employer was happy with it because the employee did earn a bonus that they needed to pay them, right? So it's just how they're paying it is like fraudulent, you know. If you're paying a cash bonus, it's going to be subject to payroll tax, withholdings, all that stuff. And so they're just trying to skirt around that. It's the same thing of like if you pay a business cash, right? Like a nail salon. I don't want to hate on nail salons or, like a mechanic. I've paid, my mechanic has asked for cash, you know. Why do they want cash? Because they cannot report it on their taxes. So there's a lot of tax things that happen for small businesses to kind of minimize their tax liability, which of course is not legal. What are some internal controls? Again, automation of payroll calculations. Okay, so if you have it all in an Excel spreadsheet and that's how your payroll is calculated, there's like definitely for mistakes, there's a ton of room for that. Also for just like someone going in and altering things. Okay. It's hard to audit an Excel spreadsheet unless you're like the only person that can open it. Okay. If it's shared with a team of people, it's like it's going to be hard to control what changes are made. That's why there's a lot of software like QuickBooks. There's specialized payroll software where there's much less room for manipulating the calculation. Okay, because it's kind of done within embedded in the software. So the employee only the accountant only has certain things that they can change. Timekeeping, again, biometrics and using multi-factor authentication, etc. Um, hiring, firing, that function of hiring and firing is separate from payroll and accounting. That way you have like this ghost employee. It's harder to do if the hiring and firing is separate from the accounting function. You'll have to have collusion between the two. Direct deposit to employee's bank account instead of checks because checks can be that's like a risk in itself. Like checks being forged and there's different fraud you can do with checks. And then manager sign off of reimbursements. Now again, that Jacksonville Jaguars, right? If there was some oversight of spend on those credit cards, then that guy probably not would not have been able to spend that whatever it was, $20 million.